Hey, what's up, folks? Welcome back to the channel. So today I'm going to sort of pitch a stock that I think has a lot of upside in the future here. It's called Asana Inc. And you may have heard of Dustin Moskovitz, who helped co-found Facebook. And he also split off in '08 and helped found Asana. And I think because of the insider activity in the stock and because he's bought like I think a billion shares, I want to say, I think the stock is primed to take off because it's hit a 52-week low. If you can see the screen here, so it closed today up 10% at $22.80. And I'm so confident in this, I actually bought an option in it, and the option is up 43%, which I'm going to show you later in the video. So stay tuned for that. But if you look year to date, at the beginning of the year, it was $71.66. It peaked for its 2022 high, February 16th at 74.13. But like everything else in the 2022 market, it's down. It hit $18.74 May 11th, which was the 52-week low or close to it. It's rebounded since then, but I still think it's at a great buy. And as you can see, according to Yahoo Finance, the one-year target estimate's $50.92. Let's go down and look at earnings real quick. So the last 4 quarters, it's beat earnings projections. You see the green dot in each of the 4 quarters. But oddly, for June 2nd, when the earnings come out, the projection is way lower. So that should make the threshold a lot easier, or the hurdle a lot easier to overcome, to beat earnings again. So I'm confident that they can make this a fifth quarter in a row. And I'll go ahead and show you, because when I see things like this, these are typically primed for a call option to do well. So on this tab over here, this is the July 15th expiring call option for $30. So this isn't much of a gamble, just banking on the stock getting to $30. I mean, as I showed you, it was just at $74 a share. So this one is up 43% today. So for me, I got into this, I believe, yesterday. So I reaped the 43% also. Wish I had gotten more, of course, but I don't have a crystal ball. But with that, I want to discuss some fundamentals. So gross margin is one of the big reasons why I think this is primed for an increase. Because if you look at, like a lot of small cap companies that I talk about, total revenue, if you look from 2019 to 20, 21, and 22, it's gone up over fourfold. Whereas cost of revenue has also gone up, but at a slower pace, meaning gross margin, which is a key metric for me when looking into a stock to get into, it's at 90%. And just as a refresher, for gross margin, you take revenue minus cost of goods sold divided by revenue. So you get about 90% with that. And just to confirm, because I've already done the math, but I pulled up here just to confirm this macrotrends.net. And you can see on the screen 90% gross margin, and it's increased quarter over quarter. It's increased almost a percentage per quarter. And we'll check this again when it updates. I'll probably do a video to see if I was right or wrong. As you saw on the VGFC company, I was right up until they had that strange activity that caused them to shoot up 118%. So looking at some other fundamentals, so again, total revenue's gone up, cost of revenue's gone up, gross profit looks great, but what's hurting them, operating income is negative, and it's kind of snowballing into the negative territory over the last 4 years. And trailing 12 months matches basically January 31st. And you see negative numbers here, and you also see negative free cash flow. But I think they have what it takes to turn this around, because sales are growing so rapidly. And I have some other notes here I want to discuss too. So I mentioned Dustin Moskovitz, the founder. He's bought like a billion shares at a discount. So I think that's a big sign. And while I'm going through this here, you can look over some fundamentals on the screen here. So insiders own about 31% of the outstanding shares of Asana. Dustin Moskovitz owns close to 24 million shares. I said a billion, I'm sorry. I think I'll have to look this over here. But he owns 24 million, as he should, because he's the founder of the company. So sales are growing at a 64% annual rate. The company has topped Wall Street's estimates each of the last 4 quarters, like I just showed. And then current share price seems to be at a very attractive low point. The 1 billion I mentioned, just to clarify, was $1 billion worth of his own company's stock at the current valuation. So obviously that could be worth a lot more, and he's got 24 million shares. So that if this takes off, that could be a huge gain. So all in all, I think that could be a very great opportunity. Not as great, this is a joke, the very great for a very garbage food company. Not like that. This could legitimately be a great opportunity. That's why I got into that option. And after these fundamentals here that I've gone over, there's EBIT, EBITDA. And then let's go into cash flow real quick. I'll just show you, negative free cash flow right now, but I do think this could turn around very quickly given the growth rate of sales. So you see, yeah, free cash flow has been negative, but it's actually less negative in 2022 so far than it was in 2021 and in the trailing 12 months. And by the way, Upstart stock was up almost 17% today. That would have been another good option play. Too bad I wasn't paying close enough attention. So let's look real quick here at Seeking Alpha. They're saying the same thing. Asana stock is beaten down, but they think it's still expensive, so not quite the same thing. I think it's actually at a decent buy point. But here's some takeaways. So 119,000 paying customers. They operate in 190 countries. 42% of their revenue comes from outside of the US. So they're getting the global market. Revenue growth year over year, 67%. Short interest, 25.26%. And they have a tool here where you can compare them to the peers, which if this comes up quick, I'll do it. But it's kind of taking a minute here. Actually, let's see what it comes up with. This may be a premium service. Yeah, it wants me to unlock it, so we'll skip that for now. So market cap 3.52 billion. Encouraging customer and revenue trends. Looks set to invest heavily in improving its product further. Despite attractive signs, losses are prohibitively large. But I think, like I said, like I've said in other videos, once the Fed gets interest rates to where they're going to be, I think it's going to be a very attractive market for maybe a 20% bounce. And this could definitely be part of that. This could help propel that, actually. Let's see, any other nuggets of wisdom I want to share here? Yeah, 40% down. This article is probably a little bit outdated. Yeah, at the beginning of May. Product spend. 125% year over year rise in customers paying more than 50,000 annually. And their main customers are the software as a service businesses that in the COVID and post-COVID environments have used this for teamwork and collaboration. So there's a prime market for this, especially as the work from home dynamic grows. And that's why I'm very bullish on this. And but there's some other headwinds also, widening losses, but I do expect these to turn around. Let's just read through this just to be fair and balanced. It expects losses to grow larger fiscal year 2023 from 157 million to approximately 238 million. So that's a concern. For a high growth company that's estimating revenues to grow by more than 50%, one would expect profitability to come fairly quickly, but it looks unlikely. But I do think this company, especially with the backing that it has, I think they do have a great long-term future. And like I said, I'm in that call option. It's up 43%. I expect it to do much better. So with that, I'll go ahead and end it. If you want to read more on this, I can put a link to the article in the description. If you like that, please remember to like, comment, and subscribe, and take care. Thanks for taking time to watch, and have a good rest of your day.
Have a blessed one.